absolutely you should borrow from your 401k to purchase your new house. Why? Because you should put your money to use today when you're alive versus on down the road. And then add to the fact that if you can take your money and make more money by putting it into the house that you decide versus taking your money and setting it with a fund account with a wealth manager who you've probably never met, who's probably charging you 1.5%, who's probably charging you a couple of flat fees on top of that. And listen, I know why some of you millennials are doing this, because I'm sure older people are telling you, no, you need to save for retirement. You need to not touch that money. You need to. In this video, I'm going to be breaking down the pros and cons of borrowing from your 401k so that you can make an intelligent decision on how you should get into your new home. If you're not contributing to your 401k, you are crazy, okay? If you're 35 years old, you earn $100,000 per year, you do a 5% monthly contribution, your employer contributes a match of 100% up to 2%, you have a rate of return at 6%, and let's say you started contributing to your 401k at the age of 22 with that first job now. And of course, the assumption is that your salary was a little less than 100k back then, right? Today, mathematical standpoint, on a conservative level, you should have $100,000 in your 401k at the age of 35. Listen, by the time you are 65, you will have $1.47 million in your 401k. So if you borrow $30,000, $40,000 from your 401k, do you think it's going to miss it? On top of the fact that you have to pay yourself back with interest. So let's take this thing a step back. So when you are employed, I'm sure many of you have elected the option to contribute to your 401k, establish your 401k account. You're contributing to it, your employer's contributing to it, and let's assume this is a traditional 401k where it is pre-tax dollars, aka tax savings. And so one of the most obvious benefits of the 401k is the ease of accessing your money, hence the 401k loan. So I've worked with a lot of clients who have chosen to do a 401k loan where it is easy. You contact your HR department, you submit your paperwork, and literally a couple days later, maybe a week later, you will have a check in your hand. Now, with that check comes some responsibility. So let's talk about the loan itself. So the 401k loan is tax-free and it is penalty-free. So it is not like a withdrawal where they're going to hit you with the Fed income tax and hit you with penalty fees. You will have to pay yourself back though. Let me add that. And literally pay yourself back with interest. So the interest is based on the prime rate, which is the prime rate is the interest rate that banks charge to lend money. So today the prime rate is 8.5%. And if you have an employer, you will pay yourself back through automatic deductions that are taken directly from your paycheck. So also, another big benefit to the 401k loan is the fact that we do not account for it in your DTI. So you taking your 401k loan will not negatively impact you on your mortgage application. Now, the only downside to a 401k loan is the fact that if you decide to leave your employer, you will have to pay your balance back in full, or they will count that balance as a distribution of income, aka taxable. Now, let me touch on the withdrawal piece, because let me be very clear that a withdrawal from your 401k is a straight withdrawal. So there will be a 10% penalty fee. There will be taxes imposed. Now, under the CARES Act, you may qualify for a hardship withdrawal, which will waive the 10% penalty fee, but you will still have to incur taxes. Now, I know my entrepreneurs are on here like, well, what about me? I got something for you guys too now. If you are a one-person business and you do not have full-time employees, you can do something that we call a solo 401k. A solo 401k has even more benefits than the 401k provided by your employer, because you can contribute to your solo 401k as both an employee and as the employer. And the 2023 contribution limits for a solo 401k plan is $66,000. AKA that can be a reduction to your taxable income, AKA tax savings. And let me add that a solo 401k, you can take a loan from that as well. You can take 50% of your balance or up to $50,000. So you guys, I wanted to share with you another strategy, another solution on if you decide that you want to buy a house, because listen, your 401k, use it to your max ability, because number one, it's your money. Number two, there are no taxes or penalties. And number three, you can get two things out of this. Point three, you can grow your money by putting it into a house that you want through equity appreciation and just buy your house. So hope you guys enjoyed this video. Thank you for tuning in. Thank you for supporting my channel. Thank you for subscribing and liking. And I will be back next week with a video. And until next time,